Take the first step towards online privacy. Get NordVPN.
Now, if you want to preserve your security and your privacy, go check out the Apollo wallet, which I think is the most secure wallet going. Use my affiliate link for a discount. I know it's morning for you. Good morning, Tom. Good afternoon. It's 10 past 12 in the UK on Saturday, the 21st of January. And just a little impromptu thing I'm going to do with Tom is I'm going to do my TA on Bitcoin, and then Tom's going to do the proper thing.
No, there are many ways to skin the TA cat. Just so everybody knows.
All right. Can you see my screen?
Yep.
All right. Hold on a second.
Very Martin Armstrong. Lots of parallel lines.
Yeah. Well, I do them. I know you just do candles. So let's have a look. This is the weekly chart, and this is against CoinMarketCap, which is the aggregate of the main exchanges and stuff.
Yep.
And let me just separate it out a little bit here. And now one of the things I notice is there's not a lot of volume with this breakout, but
it's got strong volume. No, that's strong volume.
This is my bit. This is my bit.
Sorry. I'll shut up now. Okay.
And if I bring down the EMAs, let's have a look. Which one is this one? So it's above the 200 weekly.
Yep.
Which is very good. This is the 50, which I think is going to be the next little bit of resistance around 25.
Yep.
But also that
so you use a 20, 50, 200 series?
Yeah.
Yeah.
For major moves. And also the 20, because I understand that's pretty significant from the weekly chart as well.
I'll after you get done, I'll go ahead, and then I'm going to talk to you about another series you should really consider.
Okay. So then it's above the 20 weekly, and resistance about at the 50, and then again about the 100, which ties in, which I think what you might say about the 29,000-30,000 mark. I mean, if we look on the daily
right now.
Yeah, as of right now, yeah. If we look on the daily, it is above the 200, which is bullish. And here, I mean, I said last week that there's going to be resistance around here, 20.
Yeah, of course.
1,000 around that 200, and then off it goes. So I think the next stop really is going to be around 25, but I don't think it'll be a major stop because there's nothing
on the chart
of noise on the chart there.
Yeah, there's nothing there.
Yeah, but there is a lot here, which ties in with on the weekly chart.
Yep.
So I think a little bit of noise here, 25,000, a little bit of resistance, and then on to 30, and then we shall look and see. But I like that very much.
Yeah, no, that doesn't look bad. It looks pretty standard at this point. Because the one thing I would note is that since it started to move higher, and since we got the break of the blue downtrend line, not that I'm again, for those of you who don't know, because I don't do public TA all that often. I do it on my market reports for my patrons all the time. I don't use trend lines and moving average series and Fibonacci. I've used all that stuff in the past. I don't use it anymore. I was taught by a quantitative trader. That the less you put on the chart, the more information your brain actually gets. And so a lot of this stuff, a lot of TA is a self-fulfilling prophecy. And so you have to be very careful about what you do. So because everybody thinks the 50-day moving average is important, the 50-day moving average becomes important. And you have to be careful about that, about all of that. So I just want to caution everybody that I have a very nuanced approach and philosophically to TA before I get started. So again, no surprise that on the initial breakout you get a move to the 50-day moving average. Not surprising. It trades sideways for a couple of days, and then boom, a small impulse of volume, and we get more short covering. And now we're going to move up to the possibly the 20. The one thing I would tell you, Rich, is that, and I will say this as I say, I'm not a huge fan of moving average series and all the rest of it. What I'll say is this. I think the 20, 50, 200 is not nearly as predictive across all time series as the 11, 22, 55. I'm sorry. Yeah. 11 is irrelevant. It's 22, the 55, the 144, and the 288. Period. Moving average, exponential moving averages. So the 22, the 55, the 144, and the 288. Those are really predictive. And those are really, really strong. They overlay almost every chart like you wouldn't believe. Better than the 20, 50, and 200. So just out of curiosity. But I don't want to get stuck.
Let me try
that later, and we go on to it. This is a tip for you, because I'd rather just sit down and then show people like how I would look at this chart.
Sure. Sure.
So
okay, let's do that. I'll have a look at those later.
Because it's the cross. It's like the 2255 cross is always important, and the 140. Basically, the main thing to think about is that the 288 is kind of like the yearly moving average, and the 144 is the 6-month moving average, and the 55 is the 2-month moving average, and the 22 is basically a monthly moving average. So when you do it that way, that's why it kind of overlays really, really well. Because once you strip out weekends and everything else, now in Bitcoin it may not work as well because Bitcoin trades 365, but for most markets it does. And so because they don't trade, there's really only like 200. There's even 200 trading days a year, as a matter of fact. So but those seem to work out well.
The 365 daily moving average there as well.
So all right,
148, and what was the other one?
No, it's 144 and 288.
144 and 288. Okay. Let me just do that, and
I haven't done, I haven't looked at these, and I don't use them often. But if you ever catch me like actually trading, which is very, very rare anymore because I'm pants at it. If someone really wants me to give them, a chart read like that, 288, not 48, 88, basically 22, 55, 144, and then double the 144, the 288. So
very good. I should do that.
So change the 248 to the 288. You got 248 up, not 288.
288. Oh yeah. Oh, well spotted. Okay. Do you want to share your screen while I change that?
Yeah, and we will. Let's. Now I got to figure out how to do that again. Go over to here and come on. There we go. Okay. So this is investing.com's. I just use their chart. It's not a big deal. All right. So looking at it, this is the weekly chart, and we're gonna go out to the monthly chart. I don't ever look at daily charts because they're kind of useless. Because I really don't care about stuff like that. So I would just say, look, this. So when I do Bitcoin twice a week on my market reports for my people, and I kept saying to them, look, this is unnaturally low volatility in Bitcoin, right? And it doesn't matter what these old candlestick things will tell you. None of that's important. What you do is you draw a big friggin' consolidation range around the shaded area around all of this, and you looking at the 3-year volatility statistics going through. Using the weekly data to find out what the average range is low to high, what the average differences in closes are low to high, and all that, and then you do a basic histogram analysis of what the distribution is, and you find out that Bitcoin, this is normal volatility on a weekly basis in Bitcoin. This big green boner bar here, okay, it's like $5,000, okay, going back 3.5 years. So this stuff is like insane. This is like 4 sigma. A lack of volatility, this is like 1/4 sigma, 1/4 standard deviation. It's ridiculous. So when you see something like this, got news for you. Ready? We're either going up or we're going down, and it's going to depend on the situation. Now we've been in a downtrend, so the likelihood is that we've run out of sellers here, and any attempt to push Bitcoin lower has failed. We got a nice series of higher lows here. We got a peak above the top of the range and then immediately quash back down, 5 weeks ago, back in the middle of December. This was the week of the Federal Reserve meeting. Oh, what a shock. And then after that, it's really simple. We just go, okay, if we get a breakout, the first layer of resistance is going to be right here at around 21.5. Just go and look at the previous highs, and then look across, and you'll see the dashed line, and look at all the highs, or look at all the closes and some of the highs. You just see how often that the price returns to that. Don't get confused here. Don't draw lines on charts. Don't confuse your brain. Boom, this is the story. So now the question is, if it gets to this level, is it going to keep going through it? So looking at on a week-to-week basis, when the thing closes, what I do is I will take the closing price and then plug it into a solver, a what-if solver, saying, well, if we get a very small up impulse, what's the probability based on historical data that we're going to bridge this gap between the close and using the close as next week's open and the previous high? And then by the same token, ask the same question about breaking the previous low, because all you really care about is the fact that if you break the previous high or the previous low. And the reason for that is because 85% of bars are outside bars, meaning you've broken either the previous high or the previous low and not the other one. Okay, right. And that's very important.
You mean the closes, where it closes, right, by the highs and the lows, ignoring.
No, I just know this period, and just during the range of the next week compared to the previous week is either is either violates the previous high or violates the previous low. During the week, all it has to do is violate it. Doesn't have to close above it. There's no prediction as to where something's going to close. Okay, that's the important part to understand about this. Is that once you get the violation, then you can buy the breakout. As a momentum trader, you can then buy the breakout because you've got an 85% chance that if you break the previous high, you're going to go higher. Why? Because last week's high may or may not have been important, and therefore there might be short covering, which then fuels a rally. You overwhelm the supply of sellers at this price with a higher supply of buyers, and therefore, boom, you're going higher. How higher? How much higher? I don't know. Go look at the chart and go see where the next level of big stuff is. Yeah, you can then at that point you want to overlay some moving averages or throw a couple of lines on the chart. Sure, you can do that to try and gauge where it's going to go next or where everybody else thinks it's going to go next. But remember, you're trying to outwit where everybody else is going. Right. And so it's like playing a worker placement game and trying to figure out whether your opponent's going to go grab more wood or grab more stone. Like it's the same thing. The question is you don't know what his strategy is. So you can't look over his player board and go, oh, yeah, okay, he's going to buy stone, not wood. I can go over here. I can go do something else because next time around I can go and get wood. You can't do that in the markets. You have no idea what anybody else is going to do. So you're guessing as to where they're going to go next. Do they follow traditional technical analysis looking at the 50, or do they do turtle trading and only care about average to range, or do they use like Ichimoku clouds or Bollinger Bands or whatever? It's just like all of this self-fulfilling prophecy stuff. My attitude is ignore all that. Just keep it as simple as possible and watch what's going from bar to bar. And so we got the breakout here, right? And then once you get the breakout, check to see if the breakout propagates through time. Because remember, here you're aggregating all the trades in Bitcoin for the week.
Yep.
That's important. You can go look at the day and go, that aggregates all the trades for the day. And look, this is a really bullish thing, but it's also starting to go a little parabolic. And what's the first rule of trading?
What goes up must come down.
Nope. Sell a rhino horn and buy a fishhook. Jim Sinclair. Sell a rhino horn, buy a fishhook. Because the markets that are going up parabolically are going to correct, and markets that are going down parabolically are going to reverse. Guaranteed. When? You wait for the reversal signal. So here's the gig. So with that as an intro, here's the gig. While this isn't a fishhook, because it's not, it was here, right? This was, because there's no trend. The trend channel is kind of there, but this is bad, right? This is if you looked at this this monthly thing on a weekly chart, well, let's go back and look at it. You'll see what I'm talking about. This is ugly.
Yeah.
Like at some point, you got to ask yourself, when's it going to stop? Well, there it is. And what would you look for then? I would look for an inside bar. I'd look for after a big down drop like this, that we don't violate the previous low. And I say this all the time in the market reports. Inside bars, which are that you didn't break either the previous high or the previous low. Only 5 to 10% of bars are inside bars. And then there's the last type of bar, which is where you break both the previous high and the previous low, and you engulf last week's range, called an engulfing bar. And those are anywhere from 3 to 5%. This is just general. Now, every stock is a little different. Everything is a little different. Some things are more volatile than others. So you can do the analysis to find out what the statistics of these things are. They're very simple back tests. And I'm not the world's most heavily quantitative trader in the world, but knowing these general rules, all of a sudden, you can now start looking and go, well, this looks like it's firming. And then the next week we don't get a violation of last week's low. That's good. And then we're just sitting here like in a range, cool. And then boom, of course we're eventually going to get a little bit of a breakout, but it's not enough to reverse anything because we didn't break the high of this big bar here, which is your last down. This is the bar, the downtrend bar, and we didn't reverse the downtrend bar within 2 bars. We didn't reverse this bar, so of course we're going to trade sideways for a long time. And then eventually, and look, this little rally here gets snuffed out. I'll explain. To me, that's a reversal signal. I'll explain that in a second, which of course then sets up a new downtrend. Yet no reversal signal again, trade sideways for a while, breaks out, false breakout, last gasp, and this is FTX right here. This is I think this is Terra Luna, right? And so we get the FTX thing, and then we get extreme low volatility. Notice how volatility is dampening every time we go down. But this is your fishhook. You would have bought here. You would have been wrong, but I would have bought here. I was telling you, I told a lot of people, and a lot of traders in my community were buying at 18 grand. I said, but just understand that a break of these lows here you're probably going lower. And I would, at the time, I was saying we're going back to 11, going all the way back to these highs, the breakout level, and from late 2020. We never got there, which is a good sign. And then we got this extreme level, this extreme non-volatility period, and then boom, we got a nice little breakout here, which is great. Don't get me wrong. And the reason why that's significant now is because, let's go and look. We had some nice little moves here that tried to offset on the weekly charts, tried to offset what was going on. And Alex is here, so cool. I'll wind up in just a minute. Yeah. But we never got anything even remotely close to any kind of what I would call reversal signal. Now, reversal signal happens when you get a period where you close against the closing price is against the previous trend. Okay. So in this case, we have a big long downtrend, lots of red bars, and we're going down, 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 down. The last bar in the downtrend is right here. And it looks like as long as Bitcoin holds this level through the end of January, that we're going to get a close way above the previous low. That's what I would call a one-bar reversal. Why are one-bar reversals important? Because 85% of the time, if you get a one-bar reversal, either bullish or bearish, you're going to get a continuation of the trend. If it happens within 2 bars, call it a two-bar reversal, meaning say this was a weak bar here or a little inside bar here, and then we didn't actually boner higher, then I would go, okay, well, next month if we close above this 18.3, 18.4 area, then that would be a 2-bar reversal. They continue to trend 65% of the time. A 3-bar reversal is no reversal at all because it confers no net edge. They collapse as often as they continue. And they're basically a coin flip. So I've been training my people to go, yeah, 3-bar reversals aren't reversals. And so therefore they're weak. And invariably, and if they do continue, they're usually really weak rallies because it took too much energy to get the thing past the top of the downtrend. And so the rally is snuffed out before it even gets started because the shorts have all piled in, the longs are uncommitted, and it's written right there in the chart. These bars tell a massive story, is the way I like to look at it. And as this narrative, and as a writer, and as a purveyor of narratives, once you learn how to read candlesticks like this, all you see is story. And then that story makes sense once you understand the players at the table. Now, is it telling the complete story? Of course not. But it is telling you the story of where market sentiment is. Markets don't trade on fundamentals; they trade on momentum and sentiment. I say this all the time. Fundamentals eventually take flight. So what's really interesting about this breakout in Bitcoin is not just that this is a breakout signal, great, and it's a breakout from extreme lack of volatility. What's really important here is that we now are throwing a 1-bar monthly reversal. When you propagate out in time, you're aggregating more information. You're aggregating more choices by humans, which makes them more powerful signals. So 1-hour reversals aren't interesting unless you're a day trader. 4-hour reversals aren't interesting unless you're a swing trader. Daily reversals are only, or if you're a strategic swing trader. And then when you get into investing, you're only looking at weekly and monthly charts. So for me, a close this month, and I'll be saying this on the next market report I do, would be we're looking for a close above this 21.5 area. Well, first we're looking for this. Just let's close above 18.4. We get the reversal. But if we do that and close above these 3 highs in here, that's a massive breakout signal. And if you don't think that that's not going to set Bitcoin up for a run back to 32,
come on,
looking at the monthly chart, or 33, you're out of your mind. It may take 3 months or 4 months to get there, but it's going, and then, or at least 29 and then 33. Just look for the lows to get yourself back into, and then look at these look at these tails. These tails are telling you that we had extreme emotional lows here that could not be sustained for that month. And Bitcoin really wanted to be back up in here. So once you break these lows here, there's not a whole lot of commitment here. They're going to go right back into now you start looking at where the closes were. Okay. And that's how, and as I've gotten better at doing this, I've started to get more nuanced in how I approach these things. If you go watch my market reports from 4 years ago, they will not nearly this good. But you can see the evolution of how to use. This is in the system. This is just a way of looking at markets. And I keep it as simple as possible. So there's my TA on Bitcoin. It looks great. We got long story short, TLDR, monthly breakout. If it holds this level through January, we're going back to 30, maybe 32.
That is so great. Do you want to stop sharing? And now that Alexander,
no, I don't want to. Well, I do want to stop. Now I'm oversharing, right?
now that Alexander,
Good morning, Alex.
Hello, guys. I'm very well. I'm
we're recording, by the way, Alexander. Before you say anything.
No, I absolutely. I was going to say apologies for joining late, but I got the time of our meeting today wrong. But here I am.
Well, it's great
I just came and I noticed that you'd actually started, so I thought I'd jump in. So
yeah,
here I am.
I thought we'd do a little Bitcoin video, and Tom, I'm going to have the links in the description below of this video. This is a separate video about the Bitcoin analysis because I listened to your stuff. I think it's really, really great and spot on. And now Alexander also knows how to do Bitcoin TA. Of extra video for you to do every day now, Alexander, because you don't do enough.
Oh yeah, on top of everything else that Alex does. Oh my God.
All right, so listen, I'm going to formally start. We've not created anything. I don't know what we're going to talk about because nothing's been going on in the world at all, ever. It's just gone really, really quiet. And thank you, everybody, for watching. Please follow me on Crypto Rich Odyssey, also bit.ly Crypto Rich Odyssey, also my Telegram announcements channel, and on Twitter, Crypto Rich YT. And boy, has Twitter got interesting. And very, very interesting. I'll just mention something quickly in a moment, right? So, and I'm joined by Tom Luongo of Gold Guts and Guns, and also Alexander Mercouris from the Duran, and about 27 other channels as well, which I should link to in the description below. And great to have you both with me. Great for us to be together to look at what on earth is going on in the world.